I've been covering the casino industry for more than 15 years now. I've got a lot of stories about wins, about losses in the industry, and all the little nuances that are reported each quarter that don't necessarily get a lot of coverage. So I want to dig into all this today so you have a lot of detail about how to look at casino industry earnings reports, where the money is made, and why this is, I think, one of the best cash flow industries in the world today. We're not investing tens of billions of dollars in building new casinos the way we were in the 90s, in the 2000s, even the early 2010s. This is now a cash extraction business. Companies are optimizing the amount of money that they can make from each table, from each casino, from each hotel room. And that is going to be phenomenal for investors long term because these casinos aren't going anywhere. They're going to be around for decades. And if you know where to make money, there is a lot of money to be made. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's first start with a few of the key terms in the casino industry. The key to the economics of the casino industry is how much money is being spent to build these properties and how much money is being earned from these properties on an ongoing basis. One of the biggest success stories of the industry was Las Vegas Sands building Sands Macau in the late 2000s. They made enough money back in the first year of operating that casino to pay for the upfront costs. So everything they made after that was pure profit. So this is the first thing you're going to want to look at. And this is going to be on the investing side of the cash flow statement, but a lot of companies are going to talk about this, what their capital expenditures are. Now, like I said, a lot of the casinos are built. So if you're looking at Caesars or MGM, kind of the legacy companies, they're not building new casinos anymore in large numbers. So a lot of this is what you call maintenance CapEx. But they're going to spend $830 to $860 million this year on capital expenditures. The big spending that they're going to do over the next decade or so is about $10 billion into a new casino in Japan. So that's going to be the next one to watch. What is the return on that $10 billion in Japan? The way to judge return is with what's called adjusted property EBITDA, earnings before interest, taxes, depreciation, and amortization. Some companies now, particularly MGM and Caesars, are starting to talk about EBITDAR. That also includes rent. So what exactly is this? The amount of money that you're earning before including interest. So that would be any interest on debt you've taken out to finance these projects. So if you're going to build a $10 billion casino, you're going to maybe borrow $6-7 billion to be able to do that. You want to look at what's the return before you're making those financing decisions. That's kind of a separate thing you want to think about. So interest, taxes, again, not necessarily part of your day-to-day operations. You're not really thinking about taxes. So we're going to pull that out. Depreciation and amortization, those are non-cash costs. So that $10 billion, if you're going to depreciate that capital expenditure over 10 years, you're going to have $1 billion cost. That's going to mean that your net income is going to be reduced by $1 billion compared to the cash flow that you're making from the business. That's maybe not the best judge. So we're going to look at what are you spending up front? That's like capital expenditures. And then what's the payoff? What's the cash you're getting for that? So that's where you're going to use adjusted property EBITDA or EBITDAR as a proxy for that cash flow. That's why we're using this. You can see here, this is MGM Resorts. Again, Las Vegas Strip Resorts, $828 million in adjusted property EBITDAR from those properties. Regional casinos, far less profitable, $274 million. MGM China, this is their Macau properties, $301 million. And then you have some negative costs associated with corporate expenses, stock-based compensation, unconsolidated affiliates, things like that. So that's where you get to the total adjusted property EBITDAR of $1.234 billion. This is a pretty good proxy for what sort of cash flow is coming into the company. So about $5 billion on an annualized basis. And this is where you can come over to their debt and you can say $6.3 billion worth of debt, $6.4 billion if we're going to include the short-term portion, subtract out $2.7 billion. You get about $3.7 billion of net debt, add in MGM Resorts, $12.8 billion market cap, and you get an enterprise value. This is the other metric from a valuation perspective, an enterprise value of about $16.5 billion. This is kind of a crude metric because they don't own 100% of any of these properties. These are consolidated numbers. So you can adjust these to MGM's actual ownership if you'd like, but I'm just going to use a high level look at this. You get $16.5 billion enterprise value. So that's the stock value plus the debt, because debt holders are an owner of the business, minus the cash that could be used to pay off that debt. That's where you get that $16.5 billion divided by that annualized $5 billion run rate of adjusted property EBITDA, and you get a multiple of a little over 3x. Now, EBITDA, now what complicates things with a company like MGM is they are paying that rent number. So you're going to have to subtract out their rent costs. That is $1.8 billion in rent costs for 2024. So take that 5 billion minus 1.8 billion, you get 3.2 billion. Now the enterprise value to adjusted property EBITDA is going to be a little over 5 times. So that's a pretty good approximation for the valuation for the company. It's not perfect. You can do a lot of adjustments to that, but you can see where things get pretty attractive pretty quickly. And this is how MGM is able to buy back a very significant amount of their stock over time. So that's a look at some of the high level numbers that I look at every time I look at a casino company. But there's some details that are really interesting, especially when you move over to Macau, that gives you an idea of just how much money is made at each of these table games. And it's insane. It is crazy in Macau how much money is made at each one of these games. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Let's start with some of the baseline numbers from the casino side. Table game drop. This is going to be a measure of how many dollars gets dropped into those security boxes. That's going to be kind of the measure that they're going to use for this. It's a little bit different at every casino. That's why the win percentage is going to be different. The range that they're expecting is going to be different at every casino. But what they're going to try to do is they're going to try to say, how much volume are we doing in the casino? And that's going to be the best measure that they have. They're not going to measure every single bet. But when you go up to a table and you give them a $100 bill, that's going to be your drop. Table game win is going to be how much did the casino win? You divide win by drop, you get the table game win percentage. And each one of these casino companies will have a range that they expect. That number is going to kind of be volatile over time, especially if there's high rollers in who are either very lucky or very unlucky. But that's what those three numbers mean. Slot handle is how many dollars were bet at the slots and how much was won by the casino. You can see this number, 9.4%. Slots are a very bad game for gamblers because the casino is taking a vast majority of money because this is an ongoing number. So every time you put $100 in, if you play through that $100, you're going to only end up with about $90. The table game number, you could sit there for 3 hours and lose $75 and lose $25 of your $100. They're not going to measure each bet that you have. The other metrics that all these companies give is room revenue. So this is how much they're making in the hotel. What's their occupancy? This is going to be very similar to looking at a hotel company. Their daily rate. So what are they charging for the average daily rate? So you multiply these two numbers together and you get a revenue per available room. So this ADR is going to be what you as a customer would expect to pay going to an MGM Resorts casino, $277. I'll get to some of the numbers for some of the higher end casinos because that's when the things get a little bit more crazy. Revenue per available room. So this is what they're going to average, $258. And they're going to report this for each one of their different segments. Things are a little bit different in China, but I'm going to use MGM Resorts as a better proxy there because they really focus on that. If you go all the way to the bottom of Wynn's results, and Las Vegas Sands will give you a lot of the same information as well, they're going to provide a little bit more information and context. And this gets to the way that casinos in Macau work. So this is for the Wynn Palace. This is their big casino on the Cotai Strip. They break this down into VIP and mass market. If you listen to conference calls, this is something that a lot of the companies refer to. For a long time, VIPs accounted for about 70% of the revenue in Macau. That number has not quite returned to that since the pandemic ended. So the big money is in VIPs. Mass market is fewer dollars, but much higher margin because VIPs can basically negotiate the terms that they're going to be gambling on. If you're going to be gambling $1 million or $10 million, you're going to be able to say, you know what, I want a refund on some of the money that I lose. Those are the kind of things that happen behind the scenes in a casino. But the other thing that VIPs are doing in Macau is they're using what's called rolling chips oftentimes. These are chips that are borrowed from the casino, so you're going to owe that money to the casino, and you can bet them, but you cannot win them. So I can't go to a casino and say, you know what, I want $1 million in rolling chips, walk out the door with those chips, go to Hong Kong, transfer those chips into US dollars, and get money out of China that way. You can't do that with rolling chips. What you can do is you can bet rolling chips, and then when you win regular chips. And those chips you can then take to Hong Kong. Just a little secret there that Macau is oftentimes driven, especially on the VIP market, of people wanting to get their money out of China. But look at these numbers here. Average table games, 59 in the first quarter of 2024. VIP turnover, so this is the volume of bets, $3.9 billion. VIP table game win, just 3%, $129 million. Win per table per day. So how much is Wynn Resorts, Wynn Palace winning per table per day? $24,276. So every single hour, the average win for the casino at each one of their tables in the VIP segment is $1,000. They're making $1,000 every single hour of every single day of the quarter. You get some similar numbers in the mass market. How many table games? 245 table game drop. These are going to be more similar statistics that you get from Las Vegas. $1.7 billion. Win was $437 million. 24.5%. Win per unit per day, a little bit lower, $19,589. But again, you're talking about more than 4 times as many tables. Average number of slot machines, 573. Win per slot machine, $594 per day. Occupancy, 98.8%. And revenue per available room, $330. So those are the basic numbers behind Macau, and those are going to be similar numbers to what you see from other companies who are operating in Asia. I just wanted to highlight one other casino. This is from Las Vegas Sands. This is Marina Bay Sands. This is the most profitable resort in the world. $1.16 billion in revenue, $597 million in adjusted EBITDA, an insane 51.6% EBITDA margin. But look at some of these gaming numbers. $8.2 billion in rolling chip volume. That would be the same as the VIP volume that I talked about for casinos from Wynn Resorts. Really lucky quarter. So 4.52%. That's much higher than you're going to typically see, which is right around 3%. Non-rolling chips, not quite as lucky. And slot handle, much more popular from a slot machine perspective, $6.6 billion. Now, they used to give a lot more information, but they do still give this table game win per day at Marina Bay Sands, $17,597. Slot machine win per day, $896. Average number of table games, 5 of 16. And average number of slots, 2,900. So you can see much, much bigger casino that you get from something like Wynn Palace. But the numbers, the amount of money that you're generating per table and per slot machine is just crazy. You can see that even within Macau, none of their casinos reach any sort of number like that from a win per day perspective. So Marina Bay Sands, an outperformer in the industry for good reason. Now, the biggest thing that I look at as an investor is what are you paying for a company? So what's that enterprise value, the market cap of the company, the debt of the company, minus the cash that's on hand, divided by the adjusted property EBITDA. So pull out that rent number if that is included. EBITDAR and EBITDA are not the same because rent is a cash expense that needs to be included. But if you understand that and you understand the trends, so is a region growing? Macau is growing right now. Las Vegas Sands, Las Vegas doing extremely well. Regional casinos not doing quite as well. If you're paying a reasonable price for these casino companies and you have tailwinds of growth behind you, this can be a really attractive market because these companies are generating cash and they have nothing to do with it. There's nowhere to build multi-billion-dollar casinos. If MGM Resorts is going to generate $3 billion worth of cash, what are they going to do with that cash? Well, they need a few $1 billion to fund their 40% ownership stake in the Japan casino that's going to be completed in 2030, but that's 6 years from now. They're going to maybe use 1 year worth of cash flow to be able to fund that resort. the rest of the money that they're using, they're either going to pour back into improving the existing casinos they have, or they're going to return that cash to shareholders by buying back debt or buying back stock. So that's a great position for these companies to be in. They're starting to pay dividends in some cases, buying back stock in some cases. But I think this is just a cash flow business, and a lot of these companies are trading at really attractive multiples. So if you understand what the trends are, what the margins are, where profitability comes from, and some of these details about how much money these companies are making on each of their table games, there's just crazy amounts of cash. I still think this industry can be very profitable for investors long term if you're just willing to buy and hold and ride that cash machine. But what do you think about casino stocks? Any questions that you have, leave those in the comments section below. Be happy to cover anything I can. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.